Hey, this is Cory, Boldroff, the real estate guy. This is June's monthly market update. I do these market updates to give you the most updated information about what's going on today and how it's going to affect the real estate market in the months to come and even the next couple of years. So with no further ado, let's get into it. I'm going to start off with a quote from Ivy Zellman saying that the housing will fare better than expected during the severe downturn. A new home sales rose slightly in April, defying expectations of a huge 22% drop. The mortgage demand from home buyers showed unexpectedly strong and quick recovery. The quick recovery has surprised most forecasters. We know that April was at the trough. I think for the housing market, we do expect the rebound to be quite strong in May, that the May numbers will come out at the end of June. So what we've seen is that all the experts were predicting this huge downturn, which the downturn did happen because the housing market was affected from this pandemic and shutting down our economy, shutting down businesses. But they predicted that it was going to take almost to the end of this year to see recovery. So what we see is the home price is projected to continue to appreciate. 5 of the 6 see an actual increase happening this year. 3 of the 6 see that we're actually going to see a 3 to 5% increase. I actually will bet a beer and a drink that we see that 3 to 5% increase this year. Now, Fannie Mae and Freddie Mac are part of the government. They're always more conservative, but they also saw that housing's during this pandemic, some sellers were in distressed situation or had to sell or might not have the strongest agent, and they got scared because the house was on the market for 30 days and they started dropping prices. But what we are going to see is that housing appreciation from year over year is going to actually increase this year, and they're even predicting 6 of the 6 are predicting an increase in appreciation next year and possibly even the year after, which is all great news, saying that our economy is going to be projected and helped increased by our real estate market, which is all good news, guys. New pending sales are up 24.5% month over. Now, obviously, we slowed down after February, but since February, we've been increasing. And from last month, we've actually increased 24.5%. New listings taken is 19.3%. So what this also shows you is that there's more homes selling than are coming on the market, meaning that the buyer demand is higher than what the supply of housing is. And that's also going to help increase the appreciation of home sales and home values. Both pending sales and new listings remain well up from the previous month when the market was bouncing back from a slowdown in the early days of the coronavirus pandemic. With looking at the real estate market, we got to look at what's happening in the economy and with the jobs. So the economy gains 2.5 million jobs in the month of May. This is awesome news, guys. It means that as we're lifting these safer at home orders, people are becoming employed again. They're opening up restaurants and they're starting to hire back their servers and bartenders. Construction is back, bringing on jobs. Education and health services. So we see doctors' offices and dentists start to open back up. What's surprising is the retail. As we opened up and softened this safer at home, people have already shown they're willing to go out there and shop. They're willing to go out and support these small businesses. So that is awesome news. When we look at the ones that are still in a loss, we look at the hotels. Yes, the hotel and travel industry is still suffering right now because people aren't as confident to go out there. People don't have some of their jobs, so they're not out there traveling. But we do see as we lift these bans and as countries across the world start lifting these safer at home bans, they'll be able to increase this hotel market and travel market. Now, these government job losses, a lot of them, these are state and local governments because some of them were deemed non-essential, some of them are playing political games, and some of them are just being extra cautious and safe. Now, the budget was already allotted last year for these people, so these jobs are more than likely temporary, and as these safer at home bans get lifted, as the mayors decide that they can come back, people will start to get those jobs back, which is, again, all great news, guys. The May gain was by far the biggest one-month job surge in U.S. history since at least 1939. So we do have to account that we had one of the biggest decreases or the biggest influxes of unemployment during the last couple of months. So, that is some of the reason why we've seen such a job growth. But what it goes to show you that even the experts thought it was going to take well into the third quarter and maybe in the fourth quarter to come back. And they've already seen this surge starting to happen of people, businesses bringing back their employees, opening up their small businesses, opening up their restaurants, and our citizens and our consumers are helping them and supporting them and going out there and spending the money again, which is all, again, all great news, guys. Now, when we look at the unemployment rate, and this is the breakdown of the U.S. Bureau of Labor Statistics when they were asking what it was. So right now we're at a 13.3% unemployment rate. But what we want to point out is that that means that 87.7% of Americans are still working. That's over 180 million Americans are still working. Now, I don't want to dismay that the 13.3% isn't a huge number, because that's millions and millions of families, of job losses, of people, households that are hurting right now. They're in a financial crisis. And it's sad, and my heart goes out to you guys. Just know that we do believe that a lot of these jobs are just temporary. So when the employees were actually surveyed, 17% of them feel that this is going to be a permanent job loss, but 83% believe that it's just temporary. So a lot of these 13.3% the jobs are going to come back. And even when we look at the employers, 75% of job losses are temporary layoffs and furloughs, according to the employers. So even the employers feel that they're going to be able to bring back their employees, they're going to be able to bring back those jobs once these governments lift their safer at home orders. There are news reports of large-scale hiring at firms like Amazon, Walmart, CVS Healthcare, Domino's Pizza, and other huge companies that saw increased demand in reaction to the pandemic and the partial shutdown. So one thing I will urge you guys is, as we come out the safer home and you start seeing small businesses open back up, please go help support them. Stop buying from Amazon and Walmart and CVS and start supporting our local businesses. Start supporting our local community owners, because this is truly what is the driving force in our economy is small businesses. They're one of the highest employers if we look at them compared to the big businesses. And they're one of the biggest driving forces in our economy. So please, I urge you, go out there and support your small businesses, your restaurants, your bars, your small retails, your boutique stores, even the liquor stores and things of that nature, and convenience stores. Help support them, because that is going to help drive and boost our economy way more than even the experts are predicting. The explanation of the miscalculation, because I do want to address this. I know there's been some talk in the news about the miscalculation. So some people who should have been classified as temporarily unemployed during the shutdown were instead misclassified as employed but absent for other reasons. So when they clicked on these boxes, a lot of these employees just thought, oh yeah, I'm not unemployed. This is just temporary. So the other reasons are usually people taking a leave to go on vacation, severe on jury duty, or take child's care or take care of child or relative. But during this time, it was due to the pandemic and their businesses being shut down temporarily. So they just clicked on some boxes that were wrong. So some of the numbers were misconstrued. Now, in January, February, there is no discrepancy there. There's 3.5% of the unemployment, and that was one of the lowest we've had in the history of our country. Now, when we come into March, we reported 4.4%, but they're saying it was actually closer to 5.4% if we calculate all the people that were clicking the temporary boxes. Now, in April, we predicted they stated that there was a 4.7%, and it was actually closer to 19.7%. But the good news is in May, we did have a decrease, and even as of today, June 5th, the U.S. labor statistics shows this and is still reporting this number of 3.3. But we do know that if we were at 19.7% in April, we've still come down by 10 to 20% in job gains. So their unemployment is falling, and it's falling a lot more faster and severe than we thought it was going to, at least according to the experts in the big financial institutions. So this is all good news, guys. It means that as we come into June, July, August, and as the safer at homes and we go through these phases of being the safer at home orders, we're going to get back to work, and this economy is going to boom. Also, what it shows you is the resilience and the adversity of America, that we can overcome anything, guys. We are the most powerful labor force in the world. We will overcome anything, and it's so inspiring to see. I love to see people out there helping each other and supporting each other and really bringing back the jobs into America. So if you can, help support American-made products, because that is going to help bring back manufacturing jobs and truly help bring back our economy better than it's ever been. And it'll also help us overcome our spot to be and keep our spot at #1 in the world's economy. Employers added 2.5 million jobs, blowing Wall Street's expectations out of the water. Economists had a forecast of an 8.3 million job loss, which means that we beat them by 10 million jobs. We were supposed to lose 8.3 million jobs, and instead we gained 2.5 million jobs. This is awesome, guys. This means that we are strong and that the experts don't know the resilience and the heart and the support of the American employee and the employers. So I just want to give my hats off to you guys again. I think it's awesome. I think we've been able to show using technology and tools that we can overcome anything, guys. So I do want to say this is National Homeownership Month, and I want to go over some of the top reasons to own your home. So U.S. homeownership rates, we went up and we're at one of the highest that we've ever been in the history of our country at 69.1%, right before the 2004 crash. As we came into that 2005 to 2008 crash, we've decreased and fallen all the way down to 63.5%. But what we've seen since 2016 is, one, the millennials have decided, you know what, I want to be a homeowner. I don't want to rent. I want to have this, American dream of owning a home, and I enjoy that appreciation and equity growth and the stability that homeownership gives. Also, what it is the people that lost their homes in the 2004 to 2008 crash are now able to have that 7 to 10 years of it being off their credit, about them being able to get back up on their feet, and they're getting back in the market. So this is all great things, and I do predict that in the next 3 to 4 years, we're going to have the highest home ownership rate that we've ever had in the history of our country. And again, I will bet a beer and a drink or a dessert saying that I am right. So anyone, please give me a call, send me a message. Let's take you up on that. And I hope that I am right for America's. So a National Homeownership Month. Basically what homeownership does is it gives you a sense of accomplishment, reflecting your efforts and success. There's stability that you have in controlling your future with the direction and security of having your own home and not having someone be able to kick you out. The personal expression, being able to display your uniqueness inside the own home and kind of basically have the architect and the interior design that you want to have. It also has the financial investment of growing your assets, of appreciation and equity growth, and really also having it whereas the rates, interest rates decrease, you can actually have that financial gain of lowering your monthly payment. Unlike when you rent, the rents continually keep driving up and up and up, whereas the mortgage payments are going down and down and down. So it's more affordable to own right now than it is to rent. And also the privacy of creating your own space that's solely your own. No one can tell you what to do inside your own home, at least in most markets across the country. I know there are some severe, laws and local ordinances that have been passed, but I believe they're unconstitutional and will be overturned one day when people wake up. So the non-financial benefits of homeownership when doing the study is that 93% of people said owning a home made them happier. 88% agreed that buying a home was the best decision they've ever made, and 79% believe that owning a home has changed them for the better. So not only are the financial benefits of owning a home, getting appreciation, equity, growth, stability, being able to pull cash out and put it into other investments, but it also, just as a non-financial benefit, it really helps the American soul. It really helps you grow and have a sense of worth and purpose. And I love that about homeownership. And that's one of the reasons why I'm in real estate, is to help people achieve this American dream and their own personal dreams and goals. So call me, I can help you become a homeowner if you're not already. The real estate is at 35%, remains the most favorable investment to Americans. It has been the case since 2013 when the housing market was on the rebound. More than a third of Americans have named real estate as the top investment since 2016. So of the four major choices, real estate, stocks, savings account, and gold, real estate still remains the highest by a lot. 35% of people believe it's the best long-term investment. And in real estate, the only way you lose is if you can't afford the payment. The only way you can't afford the payment if the money's not in the bank. So I tell all my clients, pull out equity out of your home, put it into the bank, put it into a savings account, a long-term annuity, an insurance product, a CD product, something that you can't lose your money in and it's going to appreciate also. So your home's going to appreciate and your savings account or long-term annuity is going to appreciate. You're going to see double growth this way rather than just seeing the appreciation in your home. Because whether you have equity in your home or not, the home is still going to appreciate by the same amount. The best part is, again, the only way you lose is if you can't afford the payment. So we come into a downturn and the market starts to drop and your house isn't worth as much as it is today. The only way you lose that money is if you can't afford the payment. The only way you can't afford the payment is the money's not in the bank. So do you see why I say take the money out of your house? Now in stocks, we've seen the volatility of it. Now there are people that are great with stocks and investing, and there are definitely some benefits to stock investing, and then savings account and gold. So again, we look at the last 10 years of the top 4 choices of best long-term investments, and we've seen real estate rise and stay steady at the very, very top. Obviously, we know stocks, kind of have taken a downturn this last year because of the volatility of it. And I think people are starting to realize that stocks really have nothing to do with their economy or how good a business is doing. It's really just where your mouth is. So we've seen those the stocks go down. As we've seen the stocks go down, we've seen gold and savings accounts start to have a little bit of a spike and rise. So what do we do right now? Well, one of the things we need to do is that's why I do these monthly market reports, is truth is attainable by laying fact upon fact upon fact. So I know the news media sometimes is doom and gloom. They base their ratings on fear and hysteria. The market's going to crash. The real estate market, it's not crashing, guys. There's no indicator that says it's crashing. Distressed home sales that are all-time low. People can't even be foreclosed on right now. Interest rates are at the lowest they've been in decades. We're at a 60-month low, meaning that there's only 60 other months in the history of our country where interest rates have been lower than what they are today. Meaning that even if we come into a downturn, no one's going to be in that financial crisis we were in 2008 because they don't have those adjustable rate mortgages. They're not up at 6.5%. We're down at 3.25%, and actually, I believe today we're at 2.875, which is just awesome, guys. That means you can lock this 2.875 for the next 30 years, and you'll only need to refinance if you absolutely have to or want to. So I think it's great news, but I want to do these and keep on laying on the facts upon facts so that you guys can be educated and feel the security of what you know the truth is. The economic impact of a home sales is at 88,416. So meaning when you buy a home, there's city transfer taxes, state taxes, there's different things that happen. The income comes into that community and it helps with the consumer spending money in that economy. So it really has a great impact on homes. Now, I have a bunch of other facts and stats here that I can go with and bore you with. If you do want this, let me know. I can send you all the slides. I'm going to just go through them real quick. You can see that all this stuff has been in here, and I'm here to give you the update. So if you want a local market update, let me know. I know in my market alone, we've had 75 new homes come on the market this last week, but we have 125 that are in escrow. So again, meaning that the buyer demand is higher than what the inventory level is. That's what's going to keep on driving the prices up, and that's the only thing that's going to slow down our economy is if we don't keep on having sellers put their homes on the market. So again, Cory Boldroff, the real estate guy. This was June's monthly market update. Check out my YouTube channel, like and subscribe it and share it if you thought this information was valuable. And let's get the truth out there with fact upon fact. Until next time, guys, I appreciate you guys. Please stay safe and healthy. And above all, know that I'm always here to help you, not just with real estate, but with anything.